Well, attorneys general in 22 states and Washington, D.C. urging House and Senate leaders to amend the U.S. bankruptcy code in order to help homeowners stay out of foreclosure. Now, some recent solutions on the table include lowering rates of existing mortgages and even wiping out some of the amount of the money owed itself. What if we did nothing, though? Let us ask Scheib. Moose is the CEO and the chairman of LoanMod.com. He joins me now from Detroit. What do you think, Moose?
Hi, Neil. How's it going?
Good.
Happy New Year.
Happy New Year to you. What do you think?
Well, you know, there's definitely a big crisis on our hands here, and it's going to take an effort from government forces, from non-government forces, and from parties all over to really get together to the bottom of this solution.
All right, but you're then urging some of these solutions that have been kicked around?
In terms of the solutions you're talking about, we're amending some of the code in the bankruptcy court. That's just simply not going to work. Any lawyer, and I'm a former lawyer myself, I don't practice anymore, but any lawyer would tell you that in order to clean this stuff up in the courts, it would take years, maybe up to 10 years.
So what do you think should be done? What do you think should be done?
Well, the solution is really loan modification. And it's negotiating these mortgages and allowing these people to stay in their homes. And a lot of the loan modifications that we do at LoanMod.com, we're able to not reduce principal, but just change the interest rates, re-amortize it.
Yeah, but they've done variations of this, right? And people who were, you know, not bailed out, but whose loans were renegotiated or refinanced or whatever you want to call it, they ended up plopping again. And some of them again after that.
You know, that's a good point, and the reason that is because they tell you about one study in the Wall Street Journal and the New York Times, but they don't tell you about the other study. The one study that they're telling you about when they say over half are redefaulting is because those payments were not reduced for the borrower per month. There's another study that was commissioned that reduced the payment on average $231 per month through reamortization or through the lower of interest rate. And in those scenarios, the redefault rate was somewhere between 15 and 20%. So it all comes down to the quality of the loan modification.
Yeah, but you can get the quality of the loan modification only if there's not a quality to the loan applicant, or the loan applicant is behind severely on his debt. You can spruce up a chicken all you want.
Well, there's one thing. You're not going to be able to help everyone. People are going to lose their homes.
So why try?
No doubt.
Why try? Why not let the markets, you know, because there are going to be a lot of good people, Moose, who are going to say, by the way, I love the name, but I digress. There are going to be a lot of people, Moose, who are going to say, you know, man, I'm busting my butt to pay my mortgage, and this guy next door who got in over his head, knew he got in over his head, now I'm bailing him out. He's getting his stuff renegotiated and refinanced, and I can barely put food on my kid's table.
Well, the reason that we have to help our neighbors is because if we don't help our neighbors and these foreclosures pile up, it's going to reduce our property values.
It already happened. It's already happened. And how much worse do you think it could get if we don't?
Oh, it's going to get much worse in 2009. There's no doubt about that.
How much worse?
There's 2.1 million armed resets in 2009. You know, you're talking in the next 3 to 5 years, there's potentially 10 million people that face the potential of foreclosure. We have to do something. We can't sit back and do nothing. But to get back to your point about the homeowners and why we should help them, because actually it makes better economic sense to help them.
All right.
When you help a homeowner, there's studies out there that suggest that you save the lender or investor $50,000
yeah,
per foreclosure.
but Moose, I'm telling you, I wish we had more time, my friend, but they're just as healthy a number of studies that say the homeowners who have been helped, the majority of them are still in a pickle. And you haven't made the situation better. You spent a lot of money to try to make a situation better, but it's not gotten better.
It will get better as long as you do quality loan modifications. What I mean by that is you have to look at the income and expenses of the homeowner. It's a one-by-one deal. It's not a mass modification. And you have to tailor it for each homeowner.
Well, they should have like a guy like you in their corner. If a debt holder hears, hey, it's Moose on the phone, they got to talk to a guy named Moose. They'll damn well renegotiate that mortgage. Moose, thank you very much. Always good having you.
Thanks for having you.
All right, well, stocks.